Welcome to today's market report. European stock markets are seen largely higher on Friday, helped by increasing confidence of a US stimulus package that is reinforcing the positive sentiment generated by the rollout of COVID-19 vaccines. DAX futures traded 0.2% higher, FTSE 100 in the UK rose 0.4%, CAC 40 dropped 0.1%. Global stock markets have seen strong gains over the last few weeks, helped by investor optimism that vaccine development will support a global recovery in 2021. The UK is set to roll out the Pfizer-BioNTech Covid-19 vaccine as early as next week. Adding to the confidence is the idea that a bipartisan $908 billion coronavirus relief plan is gaining traction in the US Congress. This potential deal was endorsed by Democrat leaders, House Speaker Nancy Pelosi and Senate Minority Leader Chuck Schumer. Republican Senate Majority Leader Mitch McConnell released his own smaller plan, but he did see hopeful signs for reaching a relief agreement before the end of the year. On top of fiscal support, the European Central Bank is widely expected to increase its bond buying next week, and the US Federal Reserve is likely to adjust its guidance around its asset purchase scheme later in December. Elsewhere, talks between the EU and the UK negotiators to secure a Brexit deal continued, although a UK government source warned chances for a breakthrough were receding. Looking at economic data on Friday, German factory orders increased by 2.9% in October, a rebound from September's revised 1.1%. But a major release will be the monthly US official employment rate. This is expected to show an addition of 469,000 jobs for November, a slowdown from the 638,000 seen in October. Oil prices gained on Friday after a group of leading producers agreed to continue restricting production given the severe hit to demand in the wake of COVID-19 pandemic. Crude futures trade 1.4% higher at $46.28 per barrel, while Brent contract rose 1.6% to $49.51 per barrel, with the two benchmarks heading for their fifth consecutive week of gains. Gold futures rose 0.3% to $1,846.80 per ounce. On the FX front, GBP/USD consolidated the previous day's gain to the fresh yearly top, currently teasing the intraday low of 134.44 after reaching the 134.99 key figure yesterday afternoon on the back of US dollar weakness. We see the Brexit woes are back to haunt the cable buyers. The Sky News suggests that the Brexit talks are going backwards, while the Telegraph indicate a weekend meeting between UK PM Johnson and French leader Macron. The Telegraph also mentioned an anonymous UK cell saying our hopes of any movement on Friday are pretty much gone now, with Monday now set as the unofficial deadline for a deal by Downing Street. Fisheries and level playing field are the tough nuts to crack for the ex-neighbours. Latest chatters suggest that the EU raised new demands on fisheries pushed by France that weighed on previous Brexit optimism. According to the Commerce Bank, GBP/USD is poised to 135.50 in December 2019 high. This is a long-term pivot and represents major resistance. The Elliott wave count is suggesting a pullback into the 133 to 132.15 range. Nearby support is offered by the 55-day moving average at 130.75 and also by 130.15, the 4-5-month uptrend. And for now, while above here, the market remains bid. Euro-dollar has reached 121.45, the 78.6% retracement, and this may provoke some consolidation. It is also the breakup point, longer term to 126.22, the 200-month moving average. This remains our overall target. We have additional 13 counts on the intraday charts and TD resistance at 121.75 to 122.04 and will attempt to buy the dips, according to Commerce Bank. According to FX Street, a move to higher resistance levels cannot be ruled out as sentiment around the US dollar is bearish, courtesy of expectations for additional US fiscal stimulus and increased hopes for coronavirus vaccine-led recovery in the global economy. That said, the US Treasury yields are rising. The 10-year clocked a high of 0.96% earlier this week, having bottomed out near 0.5% in August. Investors may rotate money out of the overbought stocks and into bonds if the yields continue to rise. The resulting risk-off would lift the US dollar, putting brakes on euro-dollar ascent. The dollar index was down 0.1% at 90.638. Just above the 2.5-year low of 90.504 seen on Thursday. Dollar yen rose 0.1% to 103.92. This is today's market news. Thanks for listening. We'll see you next time.